All right, and the market has continued to rally up, but it looks like we could be headed to a very, very dangerous zone. And I want to break this down for you and show you where I think we could be going, how high Bitcoin could be rising, because I think there's still a real possibility that we're looking at something a little bit more akin to a bear trap, which is to say that people are misleaded into thinking that we're going to keep on dropping lower. We get a big pump up, a lot of short positions, a lot of selling positions are forced to close, and then maybe we end up, coming back down. I don't know, but I want to explore all of those ideas with you and dive into the probabilities. You guys already know the deal with this YouTube channel if you've been subscribed, if you've been hitting up the likes on these videos, ladies and gents, is that we take a probability approach to these markets. This isn't about saying something is definitely going to happen or something is definitely not going to happen. This is just about understanding each of the possibilities that could be happening, assigning a probability to them, understanding what's actually going on, and then giving it our best fucking shot. And that's all we can do as traders. It's not very exciting. It's not very sexy at all, to be honest. But it's what real analysis looks like. And let's dive into it. So I want to focus your attention actually on a different chart, one where I haven't drawn anything, just so that we can do this without any confusion. So let's go ahead and take this chart right here. And really all I want to show you is that Bitcoin has actually entered a pretty clear parallel channel right now where it's just kind of slowly trending up, and I am ignoring this first wick right here, but if we zoom in onto the 1 hour time frame, it is pretty clear that we are in some sort of a rising channel right now, which is one of the key things that we were predicting on this YouTube channel when the dump first happened. As I was saying, look, I'm expecting a little bit of a recovery, maybe we can form something a little bit like this as we approach some resistance levels, and that's the next thing that I want to paint on this chart is, okay, we've established that we're in quite a short-term kind of rising wedge pattern. Well, where is the resistance here? So obviously, the first key area of resistance is kind of what we're battling right now. I mean, we're looking at kind of like 29 thereabouts to, just like 35, just this big box. But this is too large of a range, so I don't want to keep this on the chart. Just in terms of more precise lines, these are the two kind of key levels that I think could be important for Bitcoin now. But really, everything up to this green line is something to keep an eye on. These are, levels which have interacted with the market quite a bit in the past. We've formed some quite large reversals. Take a look at this right here off the $37,000 level. Quite a serious reversal up towards $52,000, $53,000 on this occasion here. Found a lot of support over here, even found a little bit of resistance. So look, that's an important line. This 33.8k level is exactly where the market bottomed out at when it first fell into this range in January of this year. So obviously this is also quite an important level going back as well. So because of those two things, these are two factors which can potentially make this challenging for Bitcoin if Bitcoin stays in this range. And so far it seems to be the case that Bitcoin's price action basically and especially on the 4 hour time frame, it's so obvious on the 4 hour time frame because we don't have any candle bodies below this parallel channel yet. Basically what we're doing is where, we're making a move to the top of the channel, move right down to the bottom. I mean, this is actually very, very straightforward. We're now at the bottom again, so potentially getting ready to take that next leg up towards perhaps that mid kind of $32,000 area where things could be getting tense again. And the reason they could be getting tense again really is this Ichimoku cloud. I mean, here on the 4 hour time frame, this is the clearest example of resistance approaching and why Bitcoin could precisely be headed into that kind of disaster. One of the things that I just want to divert your attention over to now is this beautiful fear and greed index. And if we take a look at the rating that we have right here, we're at a reading of 14. Yesterday was 10. And just overall, we were, quite low over this last week, basically. I mean, at the time of me recording this video, it's now the 16th of May. And, pretty much going back 1 week to the 9th of May, even earlier, fear and greed index was pretty low. We're now starting to pull ourselves up out of it a little bit. So we're still in extreme fear. This is still very, very low in terms of the reading that we're at. But compared to some of the lows that we saw just, for example, 2 days ago, we were at a reading of 9. We're doing better, and actually, I mean, sentiment is doing better. And the reason I'm highlighting this is if sentiment is doing better, but, we're in what are inherently very bearish patterns. These are very bearish developments to be seeing on the chart, but at the same time, we're kind of losing our fear. Do you know what I mean? Like, it's just that typical the situation that we see all the time where people are losing their fear bias when actually they need it the most, and they're adopting it when they need it the least. So obviously the time to be fearful was not on the day of this crash. This was the time to be buying, as you can see, with the benefit of hindsight. Perhaps not for the long term, although I also think these are phenomenal entry levels for the long term. I think these are blessings, but just short term, if you look at how big this move has gone now, I mean, within 3 to 4 days, that's 23, 24, maybe even pushing 25% profit if you want to be very generous with how you draw this. Pretty good, pretty good gains to be making within just a few days. Sorry, guys, got a bit of a runny nose. And so, these are things which, people are, it's a situation right now where I think people are potentially just getting a little bit more comfortable. We've been at these price levels now. Bear in mind, right, from, kind of when we entered this range to today, we've been at these price levels for about a week. So, people are kind of mentally, now used to the idea of Bitcoin being at 30,000. Obviously, not nearly as much as we're perhaps used to the idea of it being at 40 or 50,000. Probably 40,000 is where I think a lot of people have a very safe mental image of where Bitcoin should be. Obviously, that changes, and that's one of the functions that these patterns serve. Again, this is all about diving very deep into what these patterns actually mean. One of the things that I like to do on this YouTube channel, which you guys will have identified by now if you have been subscribed, is that, yes, I am going to talk about the technicals that are on the chart because in my opinion, they're the most important things. But I'm more interested in diving behind those technicals. What does this mean from a psychological perspective? What is the mass market psychology right now? These are the questions that'll actually allow you to really understand what's going on. I mean, anyone can draw a fucking parallel channel. This is very straightforward, but to actually understand what's going on behind that is where the power is as a trader. That's where the money can be made. And by the way, this is all the stuff that we dive into behind those closed doors and VIP. This YouTube channel is all about analysis. That's great. The analysis is obviously really good, but what we're doing in VIP is showing you the complete other side of that, how this gets translated into trades, and all the nuances behind that, because there's a lot to go through, but we've got it down to a system. It's pretty much, we already know what we're doing at each phase in the market. We just have to execute, put our best foot forward. That's what we do inside of VIP. So many people have been able to benefit from being inside the group for that reason, and many, many others. There's a long list of benefits you get when you join, and if you want to find out what they are, then again, just follow these steps on screen right here. First link in the description, then click on my name, and then send message. With this cumbersome process, we've kept it the same for like 5 years, so still, business still running in the same way as well. Very, very personal. This is the only way to reach out to me, guys. Please only use the links in my description. My pages are all verified, so you can't get scammed if you follow the links in my description, but you definitely will get scammed if you go out and try and search my name, whether that be on Instagram, Telegram, Twitter, YouTube, whatever. When you're on one of my platforms that are verified, please just use those links. Otherwise, yeah, you'll get scammed. Moving back to the charts here, like I was showing you with this Ichimoku cloud, definitely a little bit of resistance to be expecting. This resistance pretty much starts at about the $31,000 level. We are basically knocking on the door of that level right now, just sitting at 29.7. So, that is something that I want you guys to keep in mind. This range stretches basically the size of the whole parallel channel from 30,200 within just 4 days from now up to 33,000. So this is definitely going to be an area that Bitcoin is going to find some resistance in, I think. Now, it might not be crazy resistance, but one thing that I do want you to keep in mind is that since this Ichimoku cloud developed and became bearish, which was around the middle of April, exactly 30 days ago pretty much, we've interacted with this cloud only 3 times so far, and on this occasion we ended up seeing within 5 days a 12% dump. On this occasion we ended up seeing within 20 hours a 7% dump, and on this occasion we ended up seeing within 7 days a 36% dump. So this 4-hour Ichimoku cloud has been pretty reliable, and it might not be reliable now. Of course, we're only exploring probabilities, but to me, this is something that will pose a problem for the market. Now, I would like to see us rallying higher. You know, I don't want to see the market top out right here, but what I think really very well could end up happening is, yeah, we hit this and we're down. You know, and it's going to be very hard to battle that. Again, you know, we dive behind the psychology of what's going on here, right? If we're becoming a little bit more mentally accustomed to this price area, you know, and then we kind of start to lose it, you know, that's going to trigger all those fear emotions again, and that's one of the reasons that I think this could turn into quite as a disaster for Bitcoin. Even if it doesn't, and Bitcoin is able to push up, again, there's still so much more resistance on this chart. Now, on the daily time frame, it's so far away that it doesn't really even matter with the Ichimoku cloud, in my opinion. But you know, with the daily EMA ribbon, it's not that far away. You know, the daily EMA ribbon now stretches perfectly pretty much between my two green lines, and this is only going to keep on getting lower. You know, take a look at how this has developed just over these last few days. The EMA ribbon, you know, starts off way higher. You know, it started off on the day that this dump happened. Look at where the EMA ribbon was. You know, it stretched between $37.5 to $40,000. So quite high. Compare it to where it is right now. This EMA ribbon is way lower. It's now down at about $33,000, $34,000 up to about 37. So it's moved down by a lot. You know, I mean, this resistance catches up with us. This is the point of momentum. And so again, if we do get, you know, these big moves to the upside, there's just more resistance that this market is probably going to be capturing. It forms the basic typical pattern where the market is trending down, and then it kind of fights that trend, but only to find resistance. We're in resistance right now on the 4 hour as well, you know, but only to find resistance, and then it continues dropping lower. You know, we might not be in that situation right now, again, just because of how bearish everybody is. And, you know, I really get the sense that we need more. You know, I mean, this is not substantial enough in terms of a correction. You know, I mean, yes, we're up by 23%, and yes, it's been about, you know, I don't know, like 4 days, hasn't it? I mean, let me just check this again. Yeah, it's been about 4 or 5 days. So it is a correction. There is something going on here, but I do feel like it needs to be much stronger. I do feel like, you know, considering how big the dump was, we need to move higher than this. That's just my personal take. I don't really have any technical reason for saying that other than, you know, I mean, it's just not substantial. You know, if you look at these, I mean, this is the recent high that we set, you know, down to that low. That's a 47% drop in 43 days, you know. So I just have to expect that we recover some of that, you know, a little bit more of that. We can draw a Fibonacci retracement on this and get an idea of, you know, where the market could be going. Just looking at this right here, I think this would be quite interesting. So we got a 236 level at 30.8, the important level 382 and 618, the two important levels here, you know, lining up somewhat with what we might expect, especially this 382 level right here at 34,000. That, I think, just looking at the Fibonacci would make a lot of sense for where the market could be potentially retracing up to. At the moment, I don't want to talk about ideas that, you know, we could be recovering. I just don't think that's going to happen coming off a prior swing low. A new swing low. You know, this is a new low for this market cycle that we're in right now. And it's just very rare that off a low like this that you can trigger a bull run. You know, usually you're going to have to come back down and, you know, set a double bottom, or, you know, come down but not as low, and then, you know, kind of set a higher low, something like that. You know, that's what we would generally expect. Or, I mean, it can turn into, you know, a pattern that looks a little bit like, you know, we kind of hold the same ceiling, but our lows get higher, which paints a pattern. This is so hard to paint while I'm talking. But it paints a pattern a little bit like this, and then, you know, we get to draw a, you know, an ascending triangle, you know, and that's actually something that Bitcoin might be. And I'm just kind of showing you how these things can develop. Obviously, it can take any number of approaches, but right now we are actually in, you know, potentially in an ascending triangle as well. Let me see if I can draw that for you. I actually forgot what this ascending triangle looks like, but I think I will remember shortly. Probably is, yeah, just basically something a little bit like this. Yeah, this is it. It's basically, you know, got more or less the same ceiling, potentially looking to squeeze up and break out. If we do break out, then let's see where that target is for the breakout. All I'm going to do is take this line that shows me the height of the ascending triangle, move this to the breakout point, and that puts us at exactly 34,100. So that's a very, very important level. I would love to see Bitcoin getting up there. It would put us above the 4-hour Ichimoku cloud, which, you know, again, I do struggle to believe that Bitcoin can break this resistance easily. You know, I think this is going to be quite a challenge, or at least I think it's going to be somewhat of a challenge. But yeah, 34K is kind of the area that I want to see Bitcoin getting into, and then yeah, I'd potentially look at, you know, seeing it dropping again. Like I said, with the Fear and Greed index moving in the direction that we want to see, that's also good. It's setting us up for another drop potentially. Obviously, I don't know for sure, but that is just kind of what I'm seeing at the moment from that perspective. You guys already know the deal, by the way. You know, there's a lot of trading opportunities right here, and I'm taking advantage of them right here on Bybit only. It's pretty much the only exchange I've used for the past couple of years, and I love them to bits. So if you do want to sign up using my link in the description, you're also going to be getting some free cash deposited into your account as a thank you for using my referral link. So that means you can, you know, you get free money that you can trade with. You can do whatever you like with it. All you got to do to get that free cash is sign up using my link in the description and then make your first deposit. And that's it. And then you'll get credited some free money. Whether you actually use the exchange or not is up to you. But obviously, I think once you're on it, you're going to want to use it. So that's linked in the description, along with actually my tutorial on how to use it. So if you've been waiting and you're not so sure, now's your chance to jump in and really see what this game can be all about. Obviously, you know, this is better reserved for experienced traders, because, by the way, if you're not experienced and you're trading on an exchange like Bybit or any exchange really, you can fuck up your shit. So, you know, you've really got to know what you're doing. But, you know, I mean, I've got content on that too. You know, I've got a tutorial on how to trade for beginners. You know, that's always linked in the description and the top comment as well. So go check that out if you're interested. Let's talk about the downside now. If we end up dropping down, we can actually take the same target and move us lower. And you know, right now the breakout point would be right here. That puts us at about $26,000. But the higher we, you know, break out from, the higher that potential target might be. You know, the thing is there's not a lot of support in this range. You know, we've never really traded around here for as long as we are right now. You know, to be quite honest with you guys, I mean, the market hasn't really seen, you know, so much trading here ever in its life. You know, compared to right now, you're probably going to see the VPVR developing quite quickly. Let's take a look. Yeah, so right now there's not really much of a spike, but if we just keep an eye on this is, I want to see if I can demonstrate this to you guys visually. Let's take a different chart where I haven't drawn anything. We're going to use this chart. I just want you guys to focus on the spike of the VPVR right around over here. There really isn't much of a spike. It's quite hard to see. Yeah, it's just after. There you go. There we go. Now it's easy to see. If I replay the chart to before we entered this price range, you're probably going to see that this spike gets a lot smaller. Yeah, there is no spike now. Take a look at that. You can't see it. It's hidden behind the Bitcoin USD ticker. You know, there is no spike. But if we move the chart back to the current day, now there is a spike. You know, there is something noticeable. So you can see that peaking out. That's a very long-winded way of saying that we are establishing price history in this range right now. And this is price history that we've never had before. So, you know, it's something very important to just keep an eye on, I think. Because, what is this line? Can I delete this line? Okay, that was just a VPVR, I guess. Yeah, so you know, I mean, that's important just to start with, to understand, because that helps us put what we're looking at in context right now. You know, we're basically in territory that we haven't really been in before. And so I can only really say that, you know, our areas of support are going to be the ones that we've already predefined. What I know, you know, with some level of certainty is that if we do drop down and come back up, this resistance area is just going to keep getting even stronger and stronger. It's going to become even more of a problem for Bitcoin if we keep trading around here. So, you know, there is not a lot of price history in this range, and that makes it very easy to drop down. But that also makes it very easy to rise back up, you know, because there's just not really any support or resistance that we can reasonably expect in these ranges. And because of that, we can expect quick moves. We're losing that day by day as we're in this range. You know, the market is potentially digging itself deeper and deeper into almost, you know, sinking mud, for example. That's a brilliantly horrible analogy, and so, you know, that's one of those things that I am looking at right now. Is, you know, are we looking at a situation where we're going to come down to some of these support areas? You know, and if so, obviously, like I said, I mean, it could turn into carnage really quickly, because at the end of the day, I just want us to retain perspective of what we are, you know, truly looking at, and that is, you know, essentially, you know, quite a nasty continuation of what's already a very large, you know, bearish trend. You know, and now we're just kind of pausing and recovering and licking our wounds from a battle that we've lost, basically, you know, is the way that I see it. And given that, you know, it could very well mean that this is just a brief pause before the dump continues. I mean, the volume and so on definitely indicates that there's a lot that's still not going in our favor right now. You know, so for me, it's just going to be about watching, you know, if this bounce does come in some more substantial way, you know, what are the kind of signs of this bounce? Can I read deeper into it? You know, right now, for example, we're in this bounce, and I'm not seeing signs that this is a bounce that can stick. You know, I mean, it looks like your typical, you know, kind of almost dead cat bounce that sticks for a little while, forms a bearish continuation pattern, and drops lower. And, you know, I mean, one of the things that I challenge myself with to see, you know, is this indeed the case, is, you know, volume, for example. And we're not seeing, you know, a buildup of volume. If you look at this orange line, it takes the average of the volume bars. We're not seeing a buildup of volume as we keep trending higher. You know, really, the volume only really came in on the dump. You know, since then, it's just not increasing. You know, so that's a sign that, you know, we're just not really getting that much. You know, here's the thing, guys. One of the reasons that LUNA dropped as hard as it did, right? It wasn't necessary that there's a lot of different factors at play here, but one of these factors wasn't necessarily that people were selling LUNA so aggressively. That definitely was something that played a part in it. It definitely was. But one of the main things that drove LUNA so low, right, in this market was not that so many people were selling, but that nobody was buying, right? And so, put it this way, if you've got, you know, LUNA is a brilliant example. Let me see if I can actually illustrate this to you guys on Binance right here. You guys know that I don't like Binance, but I mean, I'll take a look anyway. You know, I wanna explain this to you. You know, this is probably, you know, not gonna make a lot of sense to many of you guys, but you know, what this shows right here, if I sort it this way, is, hang on, I need to read this just to make sure I'm not talking out of my ass, but yeah, this looks correct. These are the bids for LUNA, right? And so what this means is, and it's hard to read this because the numbers move so quick, so you can pause, but, you know, at 0.00017,696, there is, you know, X amount of buy orders for LUNA at that level. And then this shows us the asks. This is what people are asking for their LUNA, you know, whereas the numbers before are low. You know, I mean, you can scroll down. It's just going to keep getting lower and lower. We're at 174, you know, down to 172. Obviously, people are bidding for a low price. In this instance, people are asking for a high price. You scroll up, and now you're in the 181s. You're in the, you know, 183s, and so on. So this is called the order book. And if there are no bids, but there are some asks, and you don't need a lot of asks, right? If you don't need a lot of selling pressure, if the bids in total, right, if we trace this down, and the bids down to, you know, 0.00012, you know, like, so I don't know, 30% lower than where LUNA is right now. If there's not really any bids down there, you know, down 30%, you know, there's only $100 of actual dollars trying to buy LUNA between here and 30% lower. It's not actually going to take a lot of selling pressure to drive the price lower. This is a really, really important thing to understand. And it's hard for me to summarize just in this one video, but we've got content on this type of thing, like and it goes really deep. You're gonna understand it. You know, we're taking our time with it. It's recorded by me. You're going to understand, you know, what I'm saying. We haven't really had any issues with that. with very small exceptions only, since we launched the 4Flies Academy courses. People just get what we're saying the way we teach it. But I want to stick to this just for now to make this point, ladies and gents, because this is basically what I think could be happening right now, is that, yes, we are moving up, but it's just that there's not really that much selling pressure, whereas when we're moving down, there is a lot of selling pressure, so the price of one Bitcoin can easily shoot up to $60,000 right now if I decide to buy one Bitcoin from my friend for 60K. Well, then the last traded price will be $60,000. It'll be 60K for 1 second, or until however long, until somebody else trades Bitcoin at a different price, and most likely the price would come right back down to what the market price is, which is right now at $29,700. Again, this is the reason that coins like Luna will drop so hard, is because there may have just not been any bids. If there's $150 of selling pressure, so, really not that much. We've all got $150. If there's $150 of selling pressure, but there's only $75 worth of bids, well, that selling pressure is going to keep knocking those bids lower and lower and lower and lower, right? So you don't need a lot of Luna to cause a crash. You just need to have a situation where there's no support. And that's all you need in order to take the price lower. Again, it's the same mechanics that are weighing on Bitcoin right now. One of the key things that I want you guys to know about is that, obviously, one of the reasons that we see such big market drops so quickly is because people don't want to buy Bitcoin if they don't think they can make money from it, right? Bitcoin is only a speculative asset. It's not like wheat or something like that, where you need wheat to live, to make bread, for food. It's not like that. It's not a commodity. People buy Bitcoin just to speculate. And so if they don't feel like there's a reason to buy it, i.e. if they don't feel like they can make money from it, they're not going to hit buy. And then the only thing you're going to have are sellers. And if you only have sellers and there's not really any support to sustain selling pressure, again, you don't need to sell a lot of Bitcoin to crash the price. You just need to exhaust the demand. And if the demand's not really there in the first place, again, whereas it might realistically take hundreds of billions of dollars worth of selling pressure to drop Bitcoin down to, say, 20K or 10K, the first move, from 30 down to 20 might only take $20 billion of selling pressure. It doesn't necessarily need a lot of money, because there's just not any support in that range. Really, really important things to keep in mind, because as a trader, what I want to be able to do, and what we've been able to do, in these markets, the most recent big example was with Ethereum, where, you guys know very well that I played a huge trade on Ethereum, basically from this little red candle right here, right to the top. This doesn't look like a big move, but this produced just over a 200% profit for me on part of my position, and I ended up closing the rest of it at like something ridiculous, like 120% profit. I more than doubled my money on it. It was a really, really good trade. It was me understanding this stuff that enabled me to pull that trade off. And the reason for that was, quite simply because I was able to see that, these are the kind of ranges where you can expect the price to just move really, really quickly. And that's what allows us to make quick money as traders. At the end of the day, we're here because we want to make money quickly as traders. Otherwise you'd be a lawyer, or you'd be something else that just has a more stable, predictable income. But as traders, we're trying to, really shortcut that. One of the ways you shortcut that is understanding what's called these low liquidity zones, where there's not much liquidity, so the price just zips straight down or shoots straight up, without really this is an area of high liquidity. You see, there's a lot of there's a lot of stuff going on. The price is going up, it's going down, it's it's going all over the place. Here is low liquidity. It's just trending. It's just no one's really fighting the direction of the movement. And so especially here, for example, very low liquidity here, compared to the selling pressure that was coming in. So being able to understand these things can give you a big advantage. Again, that's all going on inside of VIP and the 4Flies Academy. Almost everyone that joins, depending on which plan you're going to be taking, are going to be getting free access into into these Force Academy courses where I teach you everything I know about trading and analysis from A to Z. And we, like I said, you can't go through these courses without knowing this stuff, and you're going to get it. You know, we've the way the course was designed was so that you can be a chef or a janitor. I mean, I'm talking something completely unrelated to trading, completely unrelated, but you can pick up our course, you can go through it, watch it on 2x speed, bang it out in 2 days if you're dedicated. Obviously it's better, you know, the longer you spend on it the better, but yeah, we've had people do it in 2 days easy. I would probably watch it in 2 days just because I think I've got ADHD or something, you know, and I just, you know, I need to do things quickly, otherwise I get bored. Probably don't have ADHD, let's be honest, I'm just young. But yeah, I you know, I mean, that's an approach to consider. And then, you know, not only will you gain access to those courses, but you'll also see how I'm navigating these markets right now as well. You know, obviously it's a very, very ripe trading environment, and there's a lot going on behind those closed doors. So if you do want to jump inside, then bam, these are the steps on screen. Once more, for Bybit, depending on where in the world you are, you will need a VPN. Obviously, I can't endorse that. I can't tell you to do that, but I do it myself. Never had an issue. Once more, the steps to join VIP. Quite an in-depth video today. Quite an in-depth video. Let me know what you thought about it. Smash up those likes if you enjoyed it. Let me know in the comments if you want more content like this. Subscribe to the channel if you're new around here. Make sure you tick the bell so you don't miss out on this content. You want to be able to get it as soon as it's published. Otherwise, it will become outdated. And with that, I hope you have enjoyed this one. I'm out. Bye-bye.